This is a demonstration of Exercise 23-6B, Preparation of Operating Activities section, Indirect Method, and we have the data for Crayon Company that was presented in Exercise 23-5B, including the income statement information and the comparative balance sheet information for the end of 2020 and 2019 for accounts receivable, accounts payable, and income taxes payable. And the instructions state to prepare the operating activities section of the statement of cash flows using the indirect method this time. So we're going to be using the same information that we used to do exercise 23.5 when we did the direct method for the operating activities section, but this time we're going to be doing a partial statement of cash flows for Crayon Company for the year ended December 31st, 2020, just the operating activities section, but we're going to be using the indirect method. So when we use the indirect method, we always start out with net income. So net income from the income statement was $130,000. Then we have to look at the income statement or information that's provided to us to determine any non-cash items that we need to add back or adjust net income for. And then we will also look at the comparative balance sheet information to make adjustments. So the first thing that we will be adjusting is the depreciation expense, which is shown on the income statement separately as $111,000. So we know depreciation expense is a non-cash expense that reduced net income, so we're going to need to add that back. Next, we see in the income statement that there is a gain on the sale of equipment of $7,000. The gain on the equipment was actually cash received, but we deduct that in the operating activities section from net income because we report all of the proceeds for the sale of the equipment in the investing section. So that is all of the adjustments that we would make from the income statement to net income. So now we're going to look at the adjustments that we need to make for the change in the three accounts for the comparative balance sheet. The first account we're going to look at is accounts receivable. We note that accounts receivable balance increased by $50,000. So when the accounts receivable balance increases, that means that $50,000 was revenue that was reported to get to net income that we have not collected yet. So we would have to subtract the $50,000 increase in accounts receivable. Next, we will look at accounts payable. Accounts payable also increased by $50,000 from 2019 to 2020. So when we have an increase in accounts payable under the indirect method, we would add that back. The reason why is because expenses are subtracted to get to net income, and the $50,000 represents expenses that were deducted to get to net income that we haven't paid for yet. The last item in the comparative balance sheet is income taxes payable. The income taxes payable balance decreased from 2019 to 2020 by $8,500. So we know that that means that we paid all of the income taxes expense shown in the income statement, and we paid an additional $8,500 of the beginning balance. So that means that we have had an additional $8,500 paid, and we need to subtract that. So now we can see that we had net income of $130,000. We have $95,500 of adjustments to reconcile net income to net cash provided or used by operating activities. So that leaves us, again, using the indirect method, with net cash provided by operating activities of $225,500 for December 31st, 2020. And that is the conclusion of the demonstration for exercise 23, 6B.